Thousands of investors face financial ruin because they won't be able to settle the off-the-plan apartments they signed up to buy. Hi, I'm Michael Yardney, and I've realised that a lot of industry insiders are worried about a ticking time bomb, one that the average property punter is not aware of. As if those who recently bought off-the-plan properties don't have enough to worry about, with a looming oversupply of new apartments, especially in Melbourne and Brisbane, and poor completion valuations. Now what's happened is tougher lending criteria could mean many won't be able to settle their property purchases. The problem is that off-the-plan property buyers generally can't obtain finance pre-approvals for their purchases, as pre-approvals are only valid for 90 days. This means they put down 10% deposit, intending to finance the balance, the 90% or so, on settlement. Of course, only a few months ago, this would have been easy with the banks. They were falling over each other to lend investors money. However, many buyers of these properties will not be able to obtain finance to complete their purchase because over the last few weeks, the banks have suddenly tightened their lending criteria. And this has happened on the insistence of APRA, the Australian Prudential Regulation Authority. I've always seen buying off the plan as a gamble. Buying off the plan, it gambles on how the market's going to perform. Buyers decide to purchase a property often well before construction's commenced. They exchange legally binding contracts agreeing to purchase the property at a set price when it's finished, and they're gambling that the value of their property is going to rise over the next year or two until completion. They typically put down a 10%, sometimes a 20% deposit, but they can't secure a mortgage until a few months before completion. But if they can't find the money to complete, they're in default. They're in default of their contract and they face losing their deposit, plus being sued for the damages. And these damages could mean the difference between the reduced price the developer eventually gets for the property and the price they'd agreed to pay. Their problems, of course, are going to be compounded by the fact that many will have already overpaid, paid well above market prices due to the incentives that the developers have given them, the stamp duty incentives and the completion rental guarantees. So this is going to be a pretty big problem because apparently there are 90,000 apartments constructed at the moment, sold off the plan, that have yet to settle. And according to CoreLogic, about 20% of these, about 18,000, have only paid a 10% deposit. However, finance has now become more expensive and harder to secure, with many lenders increasing their interest rates for investors and at the same time requiring you have a minimum of 20% deposit. This means these investors could struggle to find the finance to get the remaining 90% as the banks have suddenly tightened up their lending criteria. And it'll be even worse for those who plan to buy in their self-managed super fund, as some banks are now requiring an even bigger deposit for this type of purchase. Now, it won't be rosy for those who are able to settle, because even if they've got the money to do it, they'll still find themselves in trouble, as many are going to be stuck with negative equity. The glut of properties that's likely to hit the market as some investors scramble to sell their properties, when at the same time the developer is going to be trying to resell his stock, is going to lower end values. This means that property values will plummet and drag down the value for those investors who've actually had the financial discipline to settle. I'd be staying well clear of the inner CBD market and in fact the surrounding suburbs, as I think there's quite a bit of fallout that's going to occur in these locations. On the other hand, there are still going to be good locations to buy investment properties over the next little while, but with the market slowing down a bit and tighter lending criteria, property selection is going to be critical. If you'd like to work out a bit more about how to make the most of your current property portfolio or how to get into the property market, why not have a chat with the team at Metropole, metropole.com.au, to find out what your options are or how we could help you get in the property market.